Hey everyone, welcome back to Crypto Cash. Thank you very much for joining me here today again. This is your one-stop shop for cryptocurrency analysis, among other things. Now we're taking a look at WRX, which is WazirX, and I've got a really good group of folks that asked me to go ahead and cover this in my Patreon community, so thank you very much for the request. Just know we only look at the technicals here, no fundamentals, but the goal is to help educate you so you can essentially trade for a lifetime. So I'm not a financial advisor, but I do have years of trading experience. So just know this is for educational purposes only. You always need to do your own research. Okay, got a link to my Patreon account if you'd like to show your support, as well as my Telegram and Discord channel. It's all in the description below. So without further ado, let's go and check it out. All right, folks, let's go ahead and take a look at WRX. Now, WRX is a special coin here. I got a really good community here through my Patreon account. Again, thank you so much for all of my current subscribers and supporters. You're all very awesome. But this one is for you. So my WRX group, hope you enjoy. Now, if you're new to the channel, just to preface, we are always looking at just the technical data, no fundamentals. We're strictly understanding the technical charts. So we always look at a baseline first. We look at Bitcoin and Ethereum to get an understanding of what the market's doing, just so we understand how everything's kind of integrating together. Because obviously, as we know, when Bitcoin does poorly, everything else does as well. So unfortunately that's the case, but we don't have to be slaves to that. We just need to understand what's going on. And if you have a well-rounded understanding, you're going to be much more successful. So let's look at Bitcoin first. Now this is, first of all, this is a Binance trading application, Binance desktop app on my PC. I use TradingView in the top right-hand corner. You can just click on it there to enable what you see here outside of the original that is default. Looking at Bitcoin, we've got the 4-hour chart here. Just a quick things to note is that we have a support level of about 38,800. It's currently being tested and kind of hovering around, so I do feel like that might end up becoming a support. But just bear in mind, we got the 50-day moving average that rejected the price recently, and that is essentially a current resistance. So we're hopefully going to see this channel into a little bit of a consolidation and then break above. That's the goal, but all the other indicators are moving above or trending above, so not much else to really note here. And again, I use the 4-hour chart because this is the chart that all the industry leaders are using. They use the 200-day moving average and the 50, which are these two here. Okay. I also like to use the 20, but I don't really care much for that personally. Not to say it's bad, just doesn't work well for me. Moving on to Ethereum, same scenario here. So if you're new to crypto, just note that when Bitcoin sells off, Ethereum is essentially the next step for most people to reinvest. That hasn't happened recently because of the indecision in the market with Bitcoin. We've got the Elon candle here and the China candle here. So things are kind of going south for Ethereum. However, it's recovered quite nicely too. But as you can tell, it's a mirror image of Bitcoin, minus the fact that there's a death cross here with the 50-day moving average coming down to intersect with the 200. All right. So just bear in mind, not much else to really understand here. We're not here to analyze this specifically, but that is this current sentiment with Bitcoin and Ethereum. And how that applies to WRX is a few ways, right? So first of all, we're going to look at the one-day chart and see what's going on here. Correction, let me remove a couple of these indicators here. That was from my consultation earlier today. I actually do consultations on the side, so if you're interested in learning how to be more of an effective trader, feel free to reach out to me through my Patreon or my Telegram and or Discord channel. So what we're going to look at here is the one-day chart first. Now the one-day chart is good to look at because you need to know what's going on, right? You can't just jump in, seeing a nice 4-hour or 1-hour chart and be like, oh, this is great. I'm going to just go ahead and have some fun and get in and make some money. Average traders do that, unfortunately. But the one-day chart is awesome because it really helps us know what's going on in the market. In other words, what its history is, right? And the history essentially defines the future. So if we look at this here, this 1, 2, 3, 4, 5, 6, 7-day stint. 7 days, the price for Matic went up 1,400%. Okay? And that is huge. Obviously, the price went from 40 cents? To upwards of, at its highest, $6.65. So knowing that is important because it explains the retracement, right? This price movement was way too high, way too violent in one day, specifically this one day. Caused the price to come down 50% of the way, lose momentum again. And bear in mind, it probably would have continued to stay high if it wasn't for the first Bitcoin sell-off. So first major Bitcoin sell-off was on the 17th of April. That's what you see right here. Second major Bitcoin sell-off, 22nd. And then the third was the 25th. Everything kind of recovered, and then it consolidated. But the price is already so low that it kind of had to stick it out and stay low at that point, all right? So what I'm getting at here is that I believe the true range for WRX should be somewhere between $3 and $4. That's where it was going to do. That's where it was doing well before, when we had some type of market momentum, all right? Now, when you see these kind of candlesticks here, there's no wonder why the price went so low is because of all the crazy Bitcoin sell-off. So let's look at this really quick here. For Bitcoin, this is the Elon candle on the 12th, and then we have the China candle on the 18th. So let's look at the 12th. Elon candle here actually didn't do too bad. It stayed in good shape. So it's like, okay, no, price isn't going to go lower. Then we had the China candle, and that really screwed things up for a lot of people, because a lot of fear and mongering, what FUD is the acronym some people say. That's essentially all occurred right here. So it's no wonder why the price came down, bounced off the 200-day moving average, and is ramping back up again. So something to note, the 50-day moving average will become an eventual resistance level. So see what happens there. We also got to note as well, this major support and resistance previously will continue at about 225. So we'll likely see that tested in the near future. We'll probably see the 50-day moving average and the price action meet right around this support and resistance level to either be tested a few times or break above and stay above. Okay. So again, the average range for WRX should be somewhere between $3 to $4. It is significantly undervalued right now. So if we get some type of consolidation, say Bitcoin consolidates for 2 weeks straight, and we get a 2,000 price variance and just stays right between 38 and 40, WRX will be at $3 to $4 in that time, right? It has good potential. It should have stayed in this price action here, but unfortunately, Bitcoin sold off, and it sold off a few too many times, and then it came back down. So that is the case there on the one-day chart. That's why I like to identify that. RSI is under 30, which is unusual, so that's also again a good sign here of an indication of a buy signal if you're going long for, to say, a long-term swing trade rather. And then the MACD is swinging back up to imply that it's a bullish momentum. So we should see that occur soon. Now this is the 4-hour chart. I like this 4-hour chart because of the fact that we see the price action above the 50-day moving average. So it goes to show that it bounced off of that and continued. And I also like the fact that the the price action went this high and retraced back. Okay, now that's awesome because the fact that when the price goes that high, that quick, and just say, a 24-hour period, there's usually a retracement, right? Well, this slight retracement here, this little correction, if you will, is necessary because it allows the bull run to continue. Okay, so if you have a bull run that doesn't have short breaks in between, it's not a good bull run, right? If you recall what BNB a month ago, 4 weeks ago, it slowly crept up 15 to 20% every single day. And it went from 250 to 650 in a matter of like 7 or 8 days. And it's because it had these short periods of consolidation in between. It's like a little staircase. It goes up, over, up, over, up, over. You keep seeing this increase, consolidate, increase, consolidate. So we want stuff like this to happen in order for the bull run to happen, or continue, or mature, manifest, whatever the case is. This is actually a very good sign. So I like this personally. Yes, it might retrace and consolidate for a short while, but that's a good sign, and that's what we want to see. Just bear in mind the 200-day moving average is trending at about 225 right now, and it may work as a resistance level in the near future. Other than that, not much else to note. The MACD is bullish, big surprise there. RSI is creeping up closer to 70, so it's a good thing. It's consolidated. Hopefully, it just continues to, slowly mature upwards, and we'll see the price action continue. Now, looking at the 15-minute chart, first thing I do is I disable my simple moving averages and enable my exponential moving average 15 and the volume weighted average price. So if you're new to the channel, the VWAP, I refer to it as, might hear it as VWAP or volume weighted average price. It essentially tells us what the price is based on the average volume, because volume is a very underused indicator that people need to start using more often. So if you're not add it to your charts, it's only effective on 15 minutes or less. But what it's good for is telling you if it's a support or resistance level and the price is above or below what it needs to be. Right now, the price should be $1.58 based on the volume weighted average price, and the price action is about, 4 cents underneath that, which basically just means that the VWAP is working as a resistance level. So you always want to try to respect that. Try not to buy into it. Try to buy above when you get confirmation. And to me, confirmation is 2 solid 15-minute green bars. That is essentially, what is it? It's basically, what, 30 minutes? I know it seems like a long time to wait. You got to be patient. But for me, I don't have full confirmation unless I see the price above the VWAP and the EMA line for no less than 30 minutes. Okay. Again, that's if I'm using the 15-minute chart. So here's an example of that. If we go back a little bit, I actually think, here, that's from a previous example. But looking at this here, right? So, for example, we've got the EMA line here, right? And the EMA line is kind of a momentum indicator. It's similar to the MACD in a lot of ways. That it tells you if the price is bullish or bearish, right? Based on it being above or below. So right here, you see the price is consistently above, right? So this is a bull run. And it obviously maxed out and peaked out here. But generally speaking, when you see the price kind of come up, so what I do is I wait for the price to be above VWAP, right? So it's above VWAP in this range here. Great. Second check is to check to make sure the price is above EMA. Excellent, the price is above EMA right around here. Third thing I look for is 2 solid green bars above the EMA line and the VWAP line. That gives me the confirmation the price is going up. I'm no longer chasing the bottom. And that's what these 3 here are, right? This is 45 minutes, almost a full hour of price confirmation above the VWAP and the EMA line, right? So a good entry point would be somewhere in this range here. What you do is you probably take about a 30% entry initially, okay? Never go all in. You'll hear me say that time and time again. If you're a return subscriber, you'll know what I mean by that. But if you're new, don't go all in. And the reason why I say that is because if you just say you put in your full position and the price reverses, because even though you got confirmation here and this is a good confirmation, there's no, it could very well turn around on you, right? And if you don't have good risk management, then it's going to be lost. All those gains will be lost, right? So in other words, you have $1,000, just say for example, starting right now. That 30% is $300. You put a $300 position in initially, okay? And as you get confirmation, you add to your position, right? So as it continues up here, what you do is you look for confirmation. And to me, confirmation is the price. Let me get this a little closer for you. To me, confirmation is when the price bounces off of the EMA line, preferably 2, 3, 4, 5 times. Just continues to bounce. In other words, you see this right here. This is the first bounce. Comes under, but it still holds above. Another bounce, another bounce, another bounce, right? So it's consistently bouncing off of the EMA line. That's validating the fact that the bulls are still in control. So what you do is you continue to ride this out, and then when the price comes up a little bit higher, you get confirmation that it's good. Now that you can either sell and take your profits here, which wouldn't be terrible, right? That would be that'd be like a 32% increase. That's pretty good. So you might want to consider taking your profits then at that point, right? This is maybe profit target number 1. And then what you do next is you go ahead and add either to your position either at this point or when it comes back down. But what you do is you wait for the confirmation. You wait for the price to come down and bounce off the EMA line. All right, so it bounced off right here. I already marked that. So just so you take another position here, you add 20 more %. All right. What you do is you wait for the RSI to get overextended and consider selling your position, or just wait for it to continue to confirm off the EMA line. So we see this come up, come back down, bounce off EMA, another confirmation. Holding VWAP and EMA, continue to go up, and it starts ramping up pretty hard. Okay, now you ideally want to hold this until the RSI comes up over 70. At that point, pay attention to consider a good exit strategy, right? So you've got your 30% position, you got your 20% position there. And right as soon as the RSI comes up over 70, you start paying attention. You start looking, right? So this is RSI over 70 right here for the first time. So you could sell your position, or you could buy into the fact that the price is still staying above the EMA and the VWAP line. The VWAP line is actually carrying it right now, and maybe hold on until the RSI starts to taper off and come back down under 70. Okay, so that would be this point right around here. Because if you got out at this time right here, you're going to miss out on some gains. So for example, if you got out, just say when the price started to come back down closer to 70, it'd be somewhere in this range, maybe, roughly. So right there, say you got out prematurely, you'd miss on an extra 36% gains. Don't get me wrong, you'd still be in pretty good position because you'd have an overall increase of about 54% from getting in here, adding 30 plus 20%. So 50% of 500, you would have gained $250 in that scenario, right? But had you held on for that extra 36%, you would have almost doubled your money. All right, so that's kind of what you want to look for, is what you want to kind of pay attention to. I know it's easier said than done, of course, to make it look easy. It's not always this easy because things don't work out favorably like this all the time. This is a nice, smooth bull run. But the trick is to identify a smooth bull run and to understand when it's happening so you can ride the wave with these industry leaders, these whales they're referred to as, instead of trying to fight the tide and just consistently get smashed or hammered. But again, all the while when you're doing this, you have a good risk management. You always shoot for a 2-to-1 ratio. So you would put a stop limit at 1% right here. So just say you would have lost 1%, gone down 1%, would have stopped you out and called it a day. So again, easier said than done. I'll explain that more later in future videos and hope you understand that. But this is a general premise, the general concept. You want to try to do something like this and just be patient. Patience is important. That's why trading on the 15-minute chart can be difficult for a lot of people, because they're just wanting to jump right in and catch all these gains. I get it. I totally get it. You don't want to miss out. But the fear of missing out will essentially make you miss out. As weird as it sounds, it works the exact opposite. So yeah, anyways, enough about that. Hopefully you found benefit from this. Please like and subscribe if you haven't. Feel free to support me on Patreon. I've got a new group I'm going to be introducing here soon, and we'll see what happens in the next couple weeks with that. Also pay attention, I'm going to probably likely start with some live trading, or correction, some live analysis over the weekend, and eventually live trading later. Okay. So thanks again for joining me here. Hope you all have a great rest of your day. We'll see you in the next video. Take care.